Some of the financial markets are beginning to get back their grip after the initial shock that followed the announcement of the suspension of the CBN Governor, Malam Lamido Samsi. This week saw the NSE All-Share Index go up above the 39,000 mark. However, volatility continued at the foreign exchange market, but most analysts believe stability will come, but with time. Here is the scenario. Thursday, February the 20th, wasn't business as usual for most financial markets dealers. News of the suspension of the CBN governor caused vibrations in all the segments of the market.
There were issues of financial recklessness and unprofessional conduct.
At the equities market, average foreign investor sentiment entered flight mode when the announcement was made, while the bond market was immediately shut down.
It's a good development that the market is beginning to be sensitive to economic, political occurrences, which means that it is gradually beginning to be integrated into the economic system. Otherwise, before, the Nigerian stock market has always behaved anomalously. When things like this happen, you find virtually no reaction.
At the foreign exchange market, prior to the announcement in the morning of February the 20th, the Naira had been trading at around 163 to the dollar, but the announcement saw a spike to 169 Naira per dollar before trading was suspended.
Any efficient market actually thrives on information flow. And so when you have an information that may not be in the best interest of the market, then you are expected to have this kind of reaction.
When markets reopened on Friday, the Naira recovered to around 166 Naira per dollar. Let me seize this opportunity to therefore reassure all our stakeholders once again that the bank has no immediate plans to devalue the currency. Despite those assurances and intervention by the CBN, the week has seen the Naira remain under pressure, with the foreign reserve down to below the psychological resistance level of $41 billion.
If once this consistency in terms of policy direction and then in terms of the kind of information from the monetary authorities as well as the government, once it's becoming a little more predictable, as to the direction that the Nigerian economy will go, then obviously that will help to further stabilize the FX market.
While the forex market remains volatile, the equity market appears to be experiencing some calmness. The All-Share Index, which opened the week at above 38,000 points, closed higher at above the 39,000 mark. The bond market yields were also broadly stable. So, some of the markets could be said to be on the verge of recovering fully from what could be described as the shock of the century. But most economic watchers believe that understanding the economic policy orientation of the incoming CBN Governor Godwin Emefiele could help in stabilizing the markets faster.